We are beginning to see increased civil unrest around the world as a result of rising food prices. In Sri Lanka, protesters are calling for the resignation of their president as the country faces an economic crisis and the people can no longer afford the basic necessities of life like food and fuel. The homes of more than 50 Sri Lankan politicians have been burned by demonstrators, and the Sri Lankan government has given orders that looters and vandals will be shot. In Iran, there have also been violent demonstrations, with at least one dead following an announcement by the government that the price of certain subsidized food items would be allowed to rise significantly. Here in the US, we are still insulated to a significant degree from the effects of food shortages. Sure, some shelves are bare and certain products are missing at the stores, and prices have certainly been rising, but it has not yet gotten to the point that the fabric of our society is threatened by a lack of access to the necessities of life. And I want to go over a couple of the factors that have insulated the US from the worst of this so far. First of all, the United States produces quite a bit of food. In fact, we are the largest producer and exporter of food in the world, so there's not a huge risk of mass starvation here. That's the good news. The bad news is food will still become much more expensive, and that might be enough to tip us over into civil unrest. And we'll talk more about that in just a moment, but also consider that we are already seeing significant unrest in other countries, and we are not as insulated from that as you might think. We're only in the opening phases of this crisis. The full magnitude of these shortages hasn't been felt by a long shot. Crops, they take time to grow. So there's a seasonal delay, for example, between the onset of a fertilizer shortage like the one that we currently have and a big move up in food prices. Sure, speculators might bid up food prices somewhat on news of the fertilizer shortage, but the real pinch is going to be felt months later when it's harvest time for those crops that have been grown without the benefit of adequate fertilizer application. Similarly, when you have any decline in food production, it takes a little while to eat up all the food that's in reserve. Once that's gone, that's when the prices are really going to skyrocket and the shortages could become famine. So I think it's safe to say that moving forward, civil unrest around the world as a result of rising food prices is likely to persist and escalate. And if nothing else, this has the potential to greatly exacerbate the supply chain issues plaguing the global economy, leading to further shortages and even higher prices for a variety of goods. Now, the second factor that has insulated the US from rising food prices so far is the relative strength of the US dollar. Following the Federal Reserve's recent rate hike, we have seen the air begin to leak out of the asset bubbles that have been inflated over the past 2 years. With a significant sell-off in assets across the board, including equities, cryptocurrencies, and even precious metals. This sell-off has driven many investors into the perceived safety of the US dollar, and rising concerns about a lack of liquidity in various sectors of the US economy, as outlined in the Fed's recent economic stability report, have also driven up the value of cash. You can see if we take a look at the price of corn, for example, priced in the US dollar, it has certainly moved higher. But if we look at the same chart, but priced in euros, the recent spike has been sharper. And then if we look at corn priced in Japanese yen, the recent move up is sharper still. And interestingly enough, this can be seen in the chart of gold as well. I mentioned that gold and silver have fallen recently amidst this pan sell-off, and that's clearly visible on this chart of gold priced in dollars. But then if we take a look at gold priced in euros,
The decline is not nearly as pronounced.
I suspect that this flight into the dollar, while it may not be over just yet, it will ultimately be short-lived, especially if the decline in asset prices continues and becomes painful enough for the Fed to reverse course, stop tightening, and adopt new quote-unquote stimulus measures. The irony, of course, is that this whole problem of liquidity and declining asset prices and dollar scarcity is exactly a result of the Fed having had such an accommodative monetary policy for so long, keeping rates so low and letting everyone get so leveraged up and indebted that now they've increased rates by less than 1% and already everything is starting to seize up. And when that stimulus machine starts back up, it's going to be different than last time, because this time around, it's going to be occurring against a backdrop of already sky-high inflation, as well as shortages of critical resources. And that means that prices are going to be going much, much higher. And the fact is, the American consumer is already tapped out and they're not going to be able to contend with these higher prices. A recent survey by Bankrate revealed that less than 44% of Americans have enough money saved to pay for an unexpected $1,000 expense. Less than half of Americans have $1,000 saved. Combine that with the fact that we have a near record high $871 billion in consumer credit card debt with rising interest rates, meaning that debt will now be even more expensive to service. And you can see why, when the prices shoot up, watch out, because if you think we can't have civil unrest here as a result of resource shortages, I think you're going to have another thing coming. Just look at what's already happened over the past couple years. In 2020, we saw rioting and looting over the killing of George Floyd. And look, I know it's terrible when the police murder someone, and I also know George Floyd wasn't exactly an upstanding citizen. I'm not trying to delve too deeply into that topic. I know it's very divisive and controversial, but the important takeaway from that is we saw that level of chaos and lawlessness based on that event. How bad do you think it's going to be when people can't afford to feed their families? Orders of magnitude worse. Just look at what happened on January 6th at the Capitol. Regardless of your personal feelings about these events, it's clear that our society has been turned into a powder keg. And that's when times are actually pretty good. I know we've had our difficulties over these past couple years, but I really suspect that when this economic crisis kicks off, we'll be looking back at the early years of this decade rather fondly. And if we do see civil unrest, we are also likely to see some significant government intervention. First, probably price controls. Of course, those will backfire and simply exacerbate the problem, and goods that are very expensive will simply become completely unobtainable. It also seems like such a situation could be a good excuse to roll out that central bank digital currency, CBDC, that the Fed keeps talking about, possibly combined with some form of universal basic income. If the food shortage crisis becomes bad enough, not only will these interventions be implemented, the public will be begging for them to be put into place, and politicians on both sides of the aisle will feel obliged to make the politically expedient move. Yes, we are in a fourth turning, folks, a time of upheaval and generational change, but there is still some time to prepare. Those of us lucky enough to be paid in and holding US dollars can take advantage of that relative strength of the currency to acquire real assets like gold, silver, and food. As always, none of this is financial advice, but if you ask me, canned food and beans and rice may have the best ROI of just about any asset class real soon. Thank you all very much for watching. Stay safe, happy stacking, and I'll catch you next time. Smart Silver Stacker, out.